All right, guys, long time no see. I hope you guys are doing well. I'm about to start trading. The market open, like always. I've had some big news. That's why I took some time off from making some YouTube videos. A lot of things planned, a lot of things ready to launch. And before I talk to you about what's coming next, I want to make sure that we catch this trade that's about to unfold. I'm trying to get short right below here, and I'm trying to go long right above here. So depending on where the market will take me, I will go ahead and place a nice trade. All right, looks like we're getting short in. I'm filled, 2 contracts. The market is pulling, and we are out for a very nice profit. And that was, guys, that was my entire trading day. 80 ticks in profit right there, as you can see. Was that difficult? No, not really. Was that predictable? Yeah, quite a bit, to be fair. This was a 1 to 2 risk to reward trade, guys. These happen over and over and over again. And just so you guys know, this was as predictable as they come, to be fair. Very easy trade, very quick trade, as you can see. All you basically need is about 2 or 3 minutes right at the market open at 9:30 a.m. Eastern time. With this specific strategy, obviously I have a bunch of strategies. However, this is one that I like in particular, simply because it works. It's very profitable, and it's very predictable, to be fair. And it's also quite mechanic, meaning you have an entry. It's either long or short. Both work. Okay. I don't have a clear bias. All I'm trading is liquidity, right? So I'm checking for specific levels. I'm checking for a move that's about to happen right at the market open. This move always happens at the market open. Sometimes it's to the upside, sometimes it's to the downside. It doesn't really matter. However, it's quite predictable. Okay. Now, before I talk to you about other trading strategies and how you can develop your own strategies, because that was one of the switches that I have made over the last couple of months, and I want to talk to you guys about that, I have some big news, and that is that I am becoming a father. So my wife is pregnant. That's why I took some time off from YouTube. A lot of things have happened. I've been traveling quite a bit. I was in Bali the entire month of January, and I arrived back home yesterday. So 1.5 months of Bali. It's was quite a good trip. However, I don't recommend Bali, to be fair. If you want a quiet life, a focused life, if you want to focus on new projects and all of the stuff that I like doing. Bali is just quite chaotic, to be fair. Lots of things to do. Um, just a different life. And obviously, with a pregnant woman by my side, Bali is, at least in my opinion, not the number one place to be. So I'm quite happy to be back home. And another thing that has happened is that I've made some changes in regards to how I'm trading. It's not a big change. The same principles that I've always traded are still there. However, one major change that I've made is how I develop new strategies. Okay. And the way I develop new strategies is way more systematic now. It's way more based on data and based on information that gives me more confidence in my own trading strategies. Because I have noticed by the end of last year, where I had a small period of a drawdown, not too big. However, I noticed before I stopped myself that I was getting emotional. I was getting emotional because I had 4 losses in a row. I remember that day. And my instincts kicked in, and I said, now I need to increase trading my size because the next trade will become a winner. And I want to make sure that that winner actually makes up for all the losses that I have suffered so far. And that's obviously stupid. You obviously shouldn't do any of that, right? That's not at all how you should trade. But that's kind of how my instincts kicked in. That's over trading, becoming emotional. And obviously, if I had done that, that is how you blow your trading account quite quickly, right? And on the other side, there is mechanical rule-based trading. And I just showed you one of my rule-based trading strategies right here, where we went in with 2 contracts right here. Small trade, just a very small trade on this one trading account. And you can obviously go ahead and copy this one specific trade across multiple different trading accounts. So this is actually fun and actually worth your time, because obviously I'm an entrepreneur myself. I don't have that much time. Trading is a side hustle, side business for me. It's just for cash flow purposes, obviously. But if you go ahead and you place 2 contracts right here, and you can just do the math in case you're unsure yourself. So 2 contracts right here, and you have a contract, 1 tick worth being $5. And since we're trading with 2 contracts, every single tick, and a tick is basically every single small move right here, it's worth $10. And since we've just done 80 ticks, just like that, that was $800. And now the cool thing is, with certain prop trading firms, in case you have any questions about that, you can always let me know. You can copy this one trade that I've done in this one account across multiple different trading accounts. You can trade 5, you can trade 10, you can trade 20 of these accounts. But let's say you only trade with 5 of these trading accounts. That's $4,000. And getting 5 prop trading firm accounts is not difficult, all right? Not difficult at all. Now, in this case, this was a win. Okay. Sometimes you have days where you lose. However, if you only go ahead and you win 50% of the time, that means you make half of that money every single day. You can do this 20 times a month. And then your monthly profit is actually quite nice. It's quite a good number for doing something a few minutes a day. And like I said, this is a trading strategy. I'm not going to share all the details with you guys. You can go ahead, click the link below, and then I will share with you exactly how this strategy works. If you book an appointment with me, and I obviously mentor people, I show people my trading strategies. This is one of them. This only works at 9:30 a.m. every single day. If you don't have time at 9:30, there's other strategies that I recommend to you, obviously. And I want to get back to the topic of getting confidence in your trading. So what I've been doing is I've been tracking my trades way more rigorously. I hope that's the word. I'm not quite sure, to be fair. Way more detailed. So I know that, hey, I have strategy A. And I know with strategy A, I can expect a drawdown of 5 trades in a row. That's my max drawdown, or 10 trades in a row. And if I can afford, with my prop trading firms, if I can afford to lose 20 trades in a row without blowing my account, I will not become emotional, because I know losing is part of my strategy. I can lose up to 20 trades, and that is an abnormality to my strategy, because with all the back testing that I've done, I'm usually only losing 5 times in a row. And I know that after every drawdown, there will also become a winning streak. There will also be a winning streak. And that winning streak will obviously make up for the losses that I've suffered during my drawdown period. But if I am in a drawdown period, I will not get emotional, because I simply know that is part of my strategy. Okay, like I said, guys, if you want strategies that have been back tested, proven to work, and if you want to know how you can develop your own strategies that you can trade yourself using order flow, Bookmap, this is the tool that we're using right here. For example, right here, boop, you could technically now see a quick move to the upside right here. And there's specific reasons why this happens. What's about to happen right here. Okay, I would now take it back to break even, and you would have been out of the trade, no risk. Because I knew exactly the market right here is about to turn around. It was more likely here to go all the way up to this level. I called you guys, move your stop loss to break even, and the market turn around, because you can see certain things in the market if you know what to look out for. And like I said, if you're an entrepreneur, because that's the people that I like to talk to, because I'm an entrepreneur myself, trading is an amazing tool, because that's all it is, in my opinion, an amazing tool to make money so that you can reinvest the money that you make with your business into your business. You can hire a CEO, you can hire a new employee, you can hire anyone or any tool, any software that you might need to buy back your time. Because let's say you have a business right now and you are working and you're working and you're working day and night for 20,000 a month. Cool. Is that exciting? No. So why not say, hey, let me build another income stream that makes me 20K a month, so I can reinvest the 20K a month that I would usually pull out of my business into my business. I can hire an amazing CEO for my business, an amazing marketing manager, whatever it may be. And I can then get out of the day-to-day business. I can work on my business, not in my business anymore. And I do not have to decrease my lifestyle, because trading, in this case, now finances my lifestyle. And the cool thing is, you're building an asset there then, because your business will become independent of your time, your skill, and your management. And like I said, guys, I just showed you how you can make a good amount of money in a matter of seconds, as long as you know what to look out for, as long as you know how your strategy looks like, why it works, it has a reasoning behind it, it has statistics behind it, there's data behind it. And if you have all of that good stuff, then making money trading, no guarantees obviously whatsoever, but making money trading is way easier than you've probably ever thought of. And maybe you've noticed I'm not using candle charts here. You know, when you look at trading, most likely you know that most people use candles, right? Now, what are candles? Green candlesticks, red candlesticks. You've seen those most likely from pretty much every single chart. I'm not using any of that. I am using Bookmap in this case here. There's other strategies where I might use candlesticks and the volume profile and all of these certain tools. However, with this one specific strategy that I've developed over the last, I would say 4 months, roughly 3 or 4 months, I'm only using Bookmap. That's the only tool that I'm using for this one market open strategy. It's working amazingly well. You've just seen it live in action. And what we're about to witness here is also something cool. You can see right here, we are in this range, right? We have this low right here. We have this high right here. Now the market is basically bouncing off of this high quite a bit. And the market for sure wants to go here because there's a bunch of liquidity up here. However, right now we don't have enough buyers stepping in at these levels, right? In fact, buyers are getting weaker. You can see we had quite a bit of buying right here, a lot of buying right here, but the buyers are getting weaker. And what do we have now? We now have aggressive sellers coming in. Interesting, right? We went from small selling right here to more selling and more selling and more selling. So we have a change in market behavior. And if you know how you can actually use this change in market behavior to your advantage, then you can predict the markets. And if you can predict the markets, you can develop strategies. And if you can develop strategies, you can get an edge in the markets, and then you can trade profitably. And if you can trade profitably, you can trade on one account. You place a bet. You say, hey, I believe the market will go down at this exact time. If you're right, I make $200, I make $400. If I'm wrong, I might lose $100, I might lose $200. But I will place this trade across multiple different trading accounts using prop trading firms that fund your trading, and you get 80% of the profits or more. And then you suddenly have leverage. You suddenly have leverage in your trading and in your trading career, because you're still trading time for money, to be fair. However, you're trading your time for a lot of money, hopefully. And then you can focus on your business again. Focus on your business, not working in your business, focusing on working on your business. Very important. And like I said, this is just one of the trading strategies that I have. I can show you many more, but I don't want to give out any details. I just want to show you how they work, because if you want to get access to them, you have to pay for them. I'm very transparent about it. It's not a secret. You have to just pay for them, because you can use them and you can use them to make money. And if I can show you something that makes money, it's worth something, obviously. So this is not for free, but I hope that's totally fine for you. I also want to give you a small concept that might be interesting for you about weak highs and weak lows, because we've just seen it in action. So what you can see right here is that the market, every time we go to this high of this range, right? So we have this range, horizontal line here, and then another horizontal line down here. Okay, so we have this low right here, once, twice, the market came back. I think another time. My computer is quite slow. Hope it picks up a little bit. We can see that we have this high, we have this low, right? The market is bouncing back and forth, and back and forth. Now, what difference do you see? What difference do you see? First, you can see that every single time we get to this high right here, the market basically rejects this high quite aggressively. Once, twice, 3 times. It doesn't spend time at this high. Okay? Compare this to the low of this range. You can see that we spent some time here. We spent some time here, nearby this low. We broke this low, we spent some time here. We're spending some time here. It's very interesting. This is called a strong high, and this is called a weak low in this case. You can also have it vice versa, so a strong low and a weak high. However, in this case, it's a strong high and a weak low. And usually, it's way more difficult to break a strong high than in this case a weak low. And if you now combine this with buying, market just rejected this high, buying, market rejected this high once more, meaning sellers were in control. To now we see a change of market behavior. We see less buying coming in. And on the other hand, we see more selling coming in suddenly, where there wasn't a lot of selling previously, right? Selling, towards this low right here, right? We now have this low. We break this low for the very first time. We come back. And now, this is a retest, by the way, guys. We break it once more. And something very interesting now happened. Something very interesting happened. Take a look at this. This is liquidity. Once we broke through this low right here, they took out this liquidity, which is another bearish signal, confirming that the market is about to sell off. And where did it go to? The market sold off right to this level. Is there anything here? To be fair, not really. Could I have predicted this move right here? Also, not really. Not really. Some buyers stepped in, they pushed up the market. Now you can see buyers are getting less again. Sellers are stepping in again. So what is more likely to happen? Well, most likely the market's about to continue going down. There's a high chance, but this is just based on these bubbles right here and the current trend. This is not enough conviction. But it's pretty obvious why the market made a quick pullback to this level. Why? Because we had some previous levels of liquidity and aggressive selling down here. So you can see that everything can be explained as long as you know what to look out for. That's very interesting, isn't it? It's very interesting. Nonetheless, a lot of concepts here in these videos. I actually just wanted to make a quick video, but it took a bit more now because I just can't stop talking because it excites me seeing this and explaining this to you guys, all of these concepts, right? But what do we see again? Just take a look at this. A weak low, right? Look at this low. It's kind of horizontal. And take a look at this. That's a pretty strong high. Once more, downtrend, strong high, weak low. We see aggressive selling coming in again. And now it's just a matter of time until something happens. Guys, that's trading. Trading can be predictable. I'm not saying you're going to win every single trade. Obviously, you can also be wrong. It's just about statistics, knowing, hey, I have a risk reward of 1 to 2. I risk 100 to make 200. And I know on average with the strategy that I developed, with the strategy that I know, it's pretty much likely, because you would have lost this most likely now in this case. I know it's very likely that I'm going to win on average for every place that I trade $100. That's an example. However, if you are able to place 1 trade a day, 2 trades a day, 3 trades a day with your strategy that you developed or that I gave you, depending on what you're looking for, then you know, okay, if I place 3 trades per day, I have an average of $100 in profit per trade that I place with my strategy. And if I know I can duplicate and copy this one trade across multiple different trading accounts where I'm not even risking my own money, now suddenly this becomes fun. And that's why every entrepreneur, in my opinion, no matter what you're doing, it doesn't really matter, should start trading next to their business. You can do this whenever you want, whenever you have time, whenever your schedule allows you to trade, because there is a strategy for almost every single time out there. Okay, so that's enough for now. I'm gonna upload this video now. I hope you like it, and this is actually the move that I was waiting for. However, this right here, another concept, bad auction quality, to be fair. So this move is most likely not of any substance right here, just so you know. This is an abnormally once more for the market. Now the market is here quite quick. However, this move right here will be rebalanced, meaning the market will come back to at least this level at some point. Doesn't have to be now, but the market will come back to that level. Very, very important concept, because the market doesn't like these imbalances here. Okay, that's very important for you to know. Very important for you to know. But let's take a look at this again. This is so beautiful. I just can't stop looking at it. Guys, strong high, weak low, weak low. We see before we had some buyers at this level, pushing up the market to this level. Same level again, buyers coming in again. But the buyers were not strong enough, so they couldn't push the market higher. Now take a look at this. Buyers coming in, but they couldn't even push the market up to this level anymore. So the market turned around, whoop, and went all the way to this level. And I told you, this move right here is not of any substance. It's not. Because this is extremely bad auction quality. So I told you, the market will rebalance this level and come back to this level. Maybe not now, it did in this case. However, this was an entry signal for me. But it just came back. And it just goes to show that once you understand what you're talking about, predicting the market is not too difficult. So guys, that's enough for today. Without further ado, hopefully I'll see you in the next video. If you have any questions about this, feel free to let me know in the comments. And yeah, I'm happy to bring back on YouTube. I hope you liked this video, and I'll talk to you very soon. Bye-bye.